75%. That's how much of Canada's total exports go to one single country, the United States. Not to Europe, not to Asia, not spread across the world. 75% to one trading partner. And right now, the deal that kept most of that trade flowing smoothly, tariff free, without friction, is being renegotiated. The US just declined to renew it, and the talks that will determine the outcome could drag into 2027. If you live in Canada, work in Canada, buy groceries in Canada, this negotiation affects you directly, whether you've heard of CUSMA or not. Let's break down what's coming, what's at stake, and what you should actually be watching out for. Quick background if you're new here. CUSMA, the Canada United States Mexico Agreement, is the trade deal that governs how goods move across North America. It replaced NAFTA back in 2020, and it is the single most important trade agreement Canada has ever signed. Here's why it matters so much. Nearly 90% of Canada's exports to the US travel across the border tariff free because of CUSMA. The total value of trade between three countries is over 1.9 trillion with a T, 1.9 trillion US dollars every single year. The deal was built with a review clause. On July 1st, 2026, all three countries had to decide extend it for another 16 years or renegotiate. Canada said yes, Mexico said yes, the US said no. So now, Canada and US are heading into what could be the most consequential trade negotiation in a generation. So what does the US want changed? Because this is the part that matters most going forward. The Trump administration has been very specific, and there are four major pressure points Canada is going to face at the negotiation table. Number one, autos. The US wants a minimum of 50% of vehicle content to be manufactured in the United States, not just in North America. Right now, Canadian auto plants in Ontario contribute significantly to North American vehicles. A stricter US content rule could redirect manufacturing investments south of the border, threatening thousands of Canadian auto jobs. Number two, dairy. The US has long pushed for greater access to Canada's protected dairy market. Canada runs a supply management system that limits foreign dairy imports, something American farmers have been fighting for decades. Expect this to be a major flashpoint. Number three, digital. The US is pushing back hard on Canada's Online Streaming Act and Online News Act, which it says disadvantages American tech and media companies operating in Canada. Canada's digital services tax, which was temporarily paused earlier this year as a negotiation gesture, is also on the table. And number four, the trade deficit. At its core, Trump's frustration is simple. The US buys more than Canada buys from the US. Trump has called this unacceptable. Expect the US to push for changes across multiple sectors to narrow this gap. Now here's the other side, what Canada is pushing for, and Canada actually has more leverage than most people think. Canada's top priority is clear. Trade Minister Dominic LeBlanc stated it directly. Canada wants the sectorial tariffs on steel, aluminum, autos, and lumber lifted. These tariffs have cost Canadian industry billions and have been a direct contributor to our economic slowdown. Canada's leverage is that the US needs Canada too. A quarter of all US oil imports come from Canada. The US is deeply reliant on Canadian steel and aluminum for its own manufacturing, and Canada supplies critical material, lithium, cobalt, nickel, that the US desperately needs for its electric vehicle and defense supply chains. Former NDP leader Tom McClure put it plainly on BNN Bloomberg this week. I actually do believe that cooler heads will prevail and that there will be a good deal that resembles a heck of a lot of CUSMA. It just might take a while to get there. Here's the uncomfortable truth that nobody in Ottawa wants to say too loud. This is going to take a long time. Canada's former chief trade negotiator, Steve Verhul, told BMO this week he expects negotiations to run well beyond the US midterm elections in November 2026 and possibly into 2027 or later. The Eurasia Group, one of the world's leading political risk firms, has labeled the current situation as zombie CUSMA. The deal is technically alive, but the constant uncertainty functions like a permanent threat of death. Businesses can't plan, investments stall, and jobs freeze. And here's a telling detail from legal firm White and Case. The next US Mexico negotiation round is already scheduled for the week of July 20 in Mexico City, but Canada hasn't even started substantive text based negotiations with the US yet. We're still in the hallway while Mexico is already in the room. The deal isn't collapsing overnight, but the uncertainty itself, month after month, has very real economic costs. Alright, here's what this actually means for you and your daily life as a Canadian. If you work in autos, steel, or manufacturing, Ontario is the most exposed province in the country. If the US content rule tighten, automakers may shift production southward. If tariffs on Canadian steel remains, competitiveness suffers and hiring freezes. This negotiation is literally about your industry, and you should watch it closely. If you buy groceries, if the US wins dairy concessions, Canada's supply management system, which stabilizes Canadian dairy prices and protects Canadian farmers, could be weakened. Any erosion to that system flows through to what you pay at the store. Canadian farmers are already watching this very nervously. If you run a business, specifically a small business, right now CUSMA compliant goods still cross the border tariff free. But if your supply chain involves US materials or American customers, prolonged uncertainty makes it nearly impossible to price contracts, plan hiring, or invest in growth with any confidence. If you're a regular Canadian consumer, prolonged trade uncertainty means continued sluggishness in business investments, a slower job market, slower wage growth, and a longer road back to economic health. It's less visible than a tariff on your grocery shelf, but it affects your life just as much. The good news is that experts across the political spectrum broadly agree that a deal will eventually be reached. The heck of a lot like CUSMA scenario is the most likely outcome. It's the journey to get there that's going to be bumpy and long. So here is the bottom line. The US declined to renew CUSMA on July 1st. The deal remains fully in force until 2036. It is not dead. But Canada now faces a prolonged renegotiation battle on autos, dairy, digital policy, and trade deficits. Negotiations are expected to last well into 2027, and every month of uncertainty carries a real economic cost for Canadian workers, businesses, and consumers. This story is far from over. I will be covering every major development as it happens, every negotiation round, every tariff update, every decision that affects your wallet. If this video helps you in any way or form, please don't forget to subscribe to this channel. Drop a comment below, and I'll see you in the next one.